Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, it's a new week. Happy Monday to you guys as we get ourselves prepared for the first trading day of the week. I'm so excited to be with you here this morning. Well, before we kickstart the session, let's run through our daily routine to confirm that we are all on the same page. So before we begin, let's confirm that you can see my screen and you can hear my voice loud and clear without distortion. If you can do so, please drop in the comments in the comment section. Just type in hi, and this will confirm that we are all good to go, and then we can start this session. So thank you very much for your feedbacks as I look forward to them right in the comment section. Thank you very much, guys. All right. So I can see a handful of comment right here from S78599787. Thank you very much. Tick111, thank you very much. Who else is here again? Pascal Pacha. I guess you want to say bonjour. Bonjour to you too. Good morning, Priest 46, Blade 66, Stefan. Rohit 1911696. Good morning to you. Hello, Carrie. Good morning to you. Glad to have you around with us this morning. Kazuki, good morning. Jaivi, good morning to you too. Hello, Max. How are you doing? I do hope we all had a wonderful weekend. Well. Just Key, good morning to you. Thank you very, very much. I'm loving the positive energy in the air this morning. So with the couple and handful of feedbacks we have here, I will take this as a positive feedback that we are good to go this morning. And it's on this note, I welcome you all once again to yet another promising edition of the X Trend Speed Live as we take another fresh new look at the financial market using simple and fundamental tools such as trend lines, key levels, and of course chart patterns to unravel the potential trajectory of price action for this week. Well, so far this week I have a handful of high impactful assets which we will be looking at today, and I have almost like 4, 5, 6 of them. But today being the first trading day of the week, you do want to, if you have any assets you want us to look at, be it cryptocurrencies, commodity assets, currency assets, options, whatever you have, feel free to drop them in the comment section below. And trust me, I will include it into our plans for this week. So this is the best time for you to drop them. If you have any, please feel free to drop them in the comment section. But personally, I have my own assets which I already prepared for you all. And in fact, we have very simple setups that will be guiding our trading decisions for today. So I encourage us all to stay tuned in so you don't miss out on any of the valuable ideas and insight we will be talking about today. Well, for those of you who are joining us for the first time, you are highly welcome on board, and I'm very, very excited to have you around with us this morning. Now, I know you will be asking what this is all about. What is it we are really doing on this particular platform? Well, as technical traders, we gather here every day to come together as a community and engage in follow-ups and reviews of our positions, our trading positions in preparation of the New York sessions. So this session usually kickstarts about 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in during the course of this session so you don't miss out on the insights that we will be sharing. My aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So, once again, I extend a warm welcome to you and I encourage you to actively engage in the comment section. So, with that being said, here we will be diving right into the business for today. And as usual, the first thing we usually do is to keep tabs with the fundamental factors that will likely going to be affecting the market sentiment for today. And of course, for those of you who have been with us for a while now, you know how important this is, as these fundamental factors usually manifest on the charts in technical patterns and price movement. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, based on the assets I've already prepared for us for this week, I will be focusing on high impactful events from both the United States and the United Kingdom economic dockets. However, if you look at this calendar right here, you will see that we do not have any high impactful event for today, as the first event for this week is coming in on Wednesday. Now, to help us have an idea into what will be driving the market sentiment today, I was able to include the medium impactful event, and in fact, you see what we have here. We have hold on a second. For today, we have the Bank of England's broadband speech coming up in about 18 minutes from now. Now, for those who don't know, Dr. Ben Broadbent is a member of the Monetary Policy Committee of the Bank of England, and whatever he says today will be giving us an insight into the monetary policy stance of the Bank of England, economic outlook, and of course, potential future policy actions. Now, the anticipation of this speech can significantly impact market sentiment, as traders and investors will closely analyze the rhetorics for clues about future policy direction. Now, with the information we have gathered here, and as technical traders, we do want to be going back into the chart and look at things from a technical standpoint. And as usual, the first asset we will be taking on today is going to be the USOILSPOT, where we have been noticing some interesting trading setup come up at this point in time. In fact, I've been able to capitalize on a sell position right now, which is not really a sign that the sell position will be the order of the day. Now, before we go into the details on how we will be positioning ourselves for the next move, let's scale up into the higher time frame so we can have an holistic perspective into what is really going on in this particular market. Now, our analysis for this week is going to be starting from the daily time frame. Now, before I go into the technicalities of price action in the last couple of months, let's quickly talk about the fundamental factors that is going to be driving the market sentiment. And in fact, we want to know what is the latest development in the oil sector, which of course will be affecting the market sentiment. Now, the first one here that came in early this morning was the fact that we had a news that crude oil prices may find support from Russian Deputy Prime Minister Alexander Novak's statement, where he mentioned that the Russian government is considering deepening oil export cuts in December by potentially 50,000 barrels per day or more to bolster global oil prices. Now, this additional cut will go beyond the 300,000 barrels per day that had already been agreed upon for this year. Now, in addition, we have an adverse weather condition in Russia, which has contributed to the support for crude oil prices as well. Now, in addition to this one, remember we talked about the geopolitical tensions in the Middle East, where we have a situation with concerns rising due to the Houthi attacks on ships near Yemen. Now, the attacks have raised worries about potential disruption in oil supply, leading shipping firms to consider avoiding the Suez Canal as Houthi militants in Yemen escalated their assault on commercial vessels in the Red Sea. Now, this is likely going to be affecting or disrupting the supply of oil commodity. And of course, when there is a disruption of supply, what happens? There is an increase in demand, and when there is an increase in demand, the tendency for price to rise now becomes very, very likely. Now, another thing that is likely going to be supporting the bullish forecast is the news we had last week. I think I mentioned this earlier, that the International Energy Agency, that is IEA, said that also oil consumption will increase by 1.1 million barrels per day in 2024, hereby contributing to the support for a bullish outlook on the oil market. Then finally, in the last couple of months now, we saw how the US dollar index has experienced a nearly 4% weakening. A further decline could stimulate oil demand from other countries as it becomes much more available to purchase oil. Now, one thing we want to understand here is that as the US dollar drops in value, the price of oils become cheaper because the oil is more or less a US dollar denominated asset. And when price drops, like when the US dollar drops in value, what this simply means is that for those who are in the developed company or third world economies and developing economies, will find the oil prices cheaper to buy, and this could increase the demand for oil where they want to stockpile this asset, taking advantage of the reduced value of the US dollar. Now, with the way from all the fundamental factors we have here, it is more or less leaning towards an idea of buying this particular asset. However, it is not all the time that this usually happens, as we could see some new development which is not yet in the media that could affect the asset. So in that regard, let's take a technical dissection of this current market structure. Now, from a technical standpoint, what I did here was to take into consideration the nature of price September, and what I was able to come up with here is the fact that price action has been very, very bearish. And to further emphasize this bearish momentum, you will see we have, after connecting the series of lower highs, we have a couple of descending trend lines to work with. Look at one here, which I will be calling my temporary descending trend line. And this one right here is the major one. And the fact that price action remains below the descending trend line welcomes the idea that we look out for more selling opportunities. Now, in addition to this descending trend line, something interesting happened since the beginning of this month. We begin to notice that despite the strong bearish momentum, as soon as price got into that $68 area, we begin to notice how sellers were struggling to push price to the downside. And this gives us a sign that majority in the market are considering oil prices cheap enough to buy at this particular price zone. And in that regard, it begins to look as if price wants to transition into a reversal setup. Now, to help us guide our decisions for today's trading session, for this week's trading session, I was able to identify a key level at the $72.50 area, which will be guiding our trading decisions for this week. And of course, you know how we use our key levels in this community. As long as price action remains below the key level, we want to be looking out for patterns and structures that supports the idea of selling. But if price breaks out of the key level, then we want to be looking out for patterns and structures that will support the idea of buying that asset. And one interesting thing about this key level, it is how it also shares a beautiful confluence with both of this descending trend line we have here. Now, if it so happens that we have a reversal setup, then a breakout of the key level will also have broken out of those descending trend line, hereby confirming that buyers are getting stronger. But if selling pressure persists below the key level, then we want to be looking out for patterns that will support the idea of selling. Now, when we scale down into the 4 hours time frame, we begin to see a beautiful setup that we will be using to guide our decision. Price remains below the $72.50 level, which further affirms that sellers may likely be dictating the pace. So we will be watching the $70.60 area to see if price action will be breaking down the structure to the downside to further affirm the strength of the sellers. Now, with all the informations we have gathered on the higher time frame, let's scale down into the 1 hour time frame where we want to see how market participants are started this week. Now, scaling down into the 1 hour time frame, we begin to see things more clearly. Now, let's zoom right into what has been going on since the beginning of this week. Now, the first thing I observed here is the fact that price action was initially within a range. As you will see, price was confined within the $72.60 level and the $71.96 area to emphasize the level of indecision going on in this market. And of course, you know how we do it in this community, especially when we identify a flat range like this, which emphasizes the uncertainty in the market. We exercise patience as long as price action still remains within the range and wait for either a breakout of the resistance line to give us an opportunity to buy, which of course is yet to happen, or the breakdown of the support line to give us an opportunity to sell, and that in fact led to the triggering of my first sell position for the week. And at this point in time, I'm currently running with about 92 pips in profit right now. And for those of us who had capitalized on this one, well done to you for being on standby to capitalize on this move. And if you are taking advantage of this one, I will be suggesting that you move your stop losses accordingly, secure this current position while we wait for new setups that will be guiding our trading decisions for today. And in fact, I would like to see price break down the $70.60 area before I can start considering adding more sell positions to my existing trade here. So mark out this level as well. Now, for those of us who had missed out on this sell position, probably one way or the other you missed out or waiting for confirmations to happen before you join that move, well, the week is still very, very early and there are still chances that we could capitalize on that uptrend scenario. Now, one of the things we are going to be looking out for here is to wait and see if the market will come back and retest the structure or the ascending trend line we identified here to continue the downtrend scenario. So let's exercise patience at this juncture and wait to see how the market will react. And in fact, if it gives us a new setup to join the decline, then we could actually join the downtrend continuation. Now, another thing I would like to emphasize here is the $70.60 area, which we identified on the higher time frame. Now, for us to add more sell positions here, I would like to see price take out all the buy positions here. Remember, this area has a memory for buying power. So if price action happens to break down, retest the structure, this will definitely welcome more sell positions in this market. Then another thing I want to mention here, which is very, very important and peculiar to the structure, is this descending trend line we spotted on the higher time frame. Remember, we talked about this trend line being broken to the upside. Now price action is currently trading around that trend line. So it is very, very important that for those of us who had sold, ensure you move your stop losses accordingly, secure this current sell position while we wait and see how the market will react to that trend line. Now, one thing here is if price action, this current candle closes below the structure, I'm of the opinion that price may likely continue to the downside. However, if this candle closes in such a way that it gives us signs that buyers are still present, maybe it closed in the form of a hammer candle, or we begin to notice a reversal setup in the next couple of hours around this area, it could be an opportunity to join an uptrend move while we wait and see if price would retest the structure to push price to the downside, or this ascending trend line to push price to the downside. So this is my view on the US All Spot for today. I encourage us all to mark out these levels on our chart as we currently have a sell bias going on right now, and we continue to look out for selling opportunities around this area. But if it happens that price action at any point in time breaks out of the key level and the $72.60 area, and price is back above this ascending trend line, then we want to be looking out for buying opportunities. So these are my views on the US All Spot for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next financial asset on our watch list. All right. So in the absence of no questions, okay, I can see some couple of comments here. Giovanni 6127, good morning to you. Coin Troubled 99, good morning. Klima Bonjour 1812740, good morning to you. Panoyo 621, good morning to you. Asan 46, good morning to you as well. Then I noticed this comment from Scholars referring people to some platform outside this area. Please, everyone, please be mindful of such people. Extra speed as no will not refer you to other platform outside this area. So please be mindful. They are spammers and they could scam you of your money. So please be very, very mindful of such people in the comment section. All right, with that being said here, let's move on to the next asset on our watch list for this week. So the next asset on our watch list for today is the USTech100, and in fact I'm beginning to see an interesting setup gradually unfold on our chart hereby welcoming some ideas that you don't want to miss out on. Well, the US Tech 100 was one of our most profitable asset for last week as we scooped in some significant amount of profit. Remember, we took advantage of buy positions. We also sold at some point, and later in the week we also bought as well, scooping close to about 700 pips on this particular asset. So let's see if we can replicate what we did last week on the US Tech 100. Now, to start today's analysis, we will begin from the 4 hours time frame, where we want to look at things from an holistic perspective. Right here on the 4 hours time frame, what I did was to take into consideration the nature of price action since the beginning of this month. And one interesting thing you will notice here is the fact that price action has been very, very bullish. And to emphasize this bullish momentum, you will see how price action has just transitioned into an ascending channel after we connected the series of higher highs, giving us the support line of that ascending channel. And when we connect the series of we connected a series of higher lows, giving us the support line, and then the series of higher highs, giving us the resistant line of that channel. Now, there is one thing I would like to call your attention to here, that is this marginal line, which demarcates the upper half from the lower half of this channel. And in fact, if you look at that trend line, you will see how it has played a major role in determining the direction of price action. Now, look at what happened here last week, Wednesday. Ever since price action broke out of that structure, we've continued to see a series of higher lows. Look at this area here, sharp rejection, price candle closes in the form of an hammer candle and continues to find higher lows in that regard. So everything is looking much more bullish at this particular point in time. Now, to guide our decisions for this week, we have to identify a key level that we need to use to guide our decisions. Now, if you look at the structure closely, you will see that as soon as price got to the highest point at last week's trading session, around the 16,670, we begin to notice that buyers were finding it difficult to break out of that barrier. And this gives us a sign that sellers are gradually building some momentum around this area. Now, in that regard, I'm going to be using the 16,670 level as our key level for this week. Now, you know how we use our key levels in this community. As long as price action remains below the key level, we look out for patterns and structures that supports the idea of buying. However, if price action breaks out of the key level, we want to be looking out for patterns and structures that will support the idea of buying that asset. Now, considering the fact that price action is trading above our ascending trend line, and of course within an ascending channel, it makes quite a lot of sense to look out for buying opportunities. And in that regard, I would like to see price action break out of that resistant line to give me an opportunity to join an uptrend scenario where a further breakout of the 16,800 level will be welcoming more buy positions for me. Now, with the information we have gathered here, let's scale down to the lower time frame to see how market participant has been reacting to this current structure since the beginning of this week. Now, scaling down into the 1 hour time frame, we begin to see things more clearly. Now, zooming into the structure on the 1 hour time frame, you can see our ascending trend line very much intact. Price still remains above the ascending trend line. And look at what we have here. The week has started on a bullish note, as you will see here. Price started the week around the 16,590, and since then it has continued to find higher highs and higher lows, hereby transitioning into a situation where price is currently confined within the 16,645 level and the 16,590 area to emphasize the level of indecision that has gripped this particular market. And of course, you know how we use our flat channels. Whenever we identify them on the chart, we exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, considering the fact that price action remains above our ascending trend line, I have a buy stop order sitting above the 16,645 level to capitalize on the uptrend continuation. Now, that is what we are going to be looking out for here. Things are looking very bullish. Price remains above our ascending trend line, and if the breakout of the resistance line of this range happens, we join a bullish move, and ensure you have your stop losses in place. Close to your support line here will make quite a lot of sense. That's about between 40 to 50 pips. Stop loss will be quite okay for this particular position. Then remember that we have our key level. Remember, our key level remains here. So I want to allow this key, okay, right here. So our key level for this week remain above the 16,670, and if price continues to find new highs, breaking out of the structure, we welcome more buy positions to our existing trade. Now, in as much as we are looking out for buying opportunities here, there are chances that sellers could also come in. In fact, since last week, we have seen how this area had been a barrier for buyers, as every attempt by the buyers to break out of the structures was met with strong resistance from the sellers. Now, let me scale back up into the 4 hours time frame. I needed to show you something here. Now, if the selling pressure persists here, we might likely see a situation where price will break down this ascending trend line, maybe to bring price back into the support line of that ascending channel, which interestingly shares a confluence with the 16,410 level, and that will be dovetailing to about a minimum of 180 pips to a maximum of 200 pips to catch there. And in fact, if price does break down the ascending trend line, we could be looking out for more selling opportunities, or even a buy pressure above this area could incite an uptrend continuation. So I needed also to see this on the higher time frame. So scaling down into the 1 hour time frame, you will see how the support line of this range we identify here shares a beautiful confluence with the ascending trend line we spotted on the higher time frame. Now, if price action breaks down the support line of this range, we will see price also would have broken down the ascending trend line as well to buttress the strength of the sellers here. So you can see how simple the structure is. Our center of focus is between the 16,645 and the 16,590, where depending on the direction of this breakout will give us an insight into where price is likely going for this week. So let's mark out these levels on our chart and let's see where the breakout will happen so that we can join that potential move in either direction. So this is my simple view on the USTech 100 for today. If you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. All right, so in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list for today. So the next asset on our watch list for today is the GBPUSD, the cable market, of course, and GBPUSD was one of our profitable assets for last week. Remember, we have been buying this asset throughout the course of last week trading session, and we did had multiple entries on this one as we rode that momentum all the way into the 1.2800 area, capitalizing over 650 pips from multiple buy entry. And once again, congratulations to everyone who had been part of this profitable journey. Now, as we head into the new week, the pound sterling experienced a little bit of deep buying around the 1.26550 area during the Asian session today to buttress some buying attempts in this particular market, maybe temporarily halting the retracement slide from the 1.2800 area, which was hit during the course of last week. Now, with that in mind, we've established a new support line for the week. Now, another thing I would like to emphasize here is that the current upswing in this pair is underpinned by the Bank of England's steadfast commitment to a prolonged restrictive stance aiming to curtail inflation. And from what we had last week, from the Bank of England's Governor Andrew Bailey, he did mention the possibilities of new rate hikes in the nearest future, and this of course is a positive window for investors to bring their funds into the pound sterling. Now, the bullish momentum finds additional support in the positive signal from the United Kingdom PMI data, which was released last week Friday, indicating a late year surge in growth and steering the economy away from recession in the last quarter. Now, the GBPUSD, propelled by this momentum and a subdued US dollar, benefits from a favorable bullish momentum. And in fact, the bearish momentum we've been noticing since last week Friday from a technical standpoint could be a retracement of that impulsive move. And of course, we want to wait and see how far will this retracement phase go before the next wave of bullish momentum will happen. Now, to prepare ourselves for this week, I was able to identify some simple setups we will be using to guide our decisions. And to start this analysis, we will begin from the daily time frame. And right here on the daily time frame, you would agree with me that we are back into a crucial area, which is known to be a strong selling niche in this market since the month of June. Now, if you look at the structure closely, you will see that the area between the 1.2800 level and the 1.27350 area has always been a barrier for buyers in this market. Now, look at what happened in the month of June. This area was more of a strong selling niche, though we had a breakout of the structure during the month of July, which led to the highest level for price action for the year. But it took about a month before price action came back again, dropped down below the structure, and since the month of August, price action had remained below the zone to further emphasize the strength of the sellers. Now, lately we saw some attempt by the buyers to break out, which failed, of course, and last week's trading session, despite the strong bullish momentum we witnessed, as soon as price got into the zone, we saw our price action dropped again, started a bearish momentum from that area. Now, it is believed that the sell pressure we witnessed on this asset last week Friday was more or less driven by the hawkish statement by the New York Fed president, that is Williams, who mentioned that the rate hike, it cannot be negated at this point in time, as the US economy is yet to fulfill its 2% target for inflation rate. Now, that opens up a whole window for the potentials that the dollar could still do very well before the end of the year. And that led to that sell pressure we noticed around that zone at the end of last week trading session. Now, the question going into the new week is, will the sell pressure persist, bringing price down maybe into this ascending trend line or that 1.25 area before the uptrend move will happen? And in fact, that is dovetailing to about 200 pips to catch there if price action goes that far. Or are we going to be seeing price break out of this zone to incite an uptrend move? So we are at a crucial juncture in this market. Now, to have a better idea into what is going on, I was able to identify a simple setup on the 4 hours time frame which we will be using to guide our trading decisions. Now remember, we are still above the ascending trend line which we spotted on the higher time frame, as you will see right here. And in fact, in addition to this, I have a couple of levels which we will be using to guide our decisions for this week. Now, one of the levels here is the 1.2500 level, which I consider to be a strong demand zone, as you will see that since price broke above this level during the mid-month of November, price action had remained above that structure, further emphasizing this area to be an accumulation zone. Now, last week Wednesday, we saw this strong impulsive bullish leg, which we of course took advantage of, leading to the breakout of this descending trend line. And from a technical standpoint, whenever we have price breakout of a key structure such as this trend line, we do expect that at some point in time price may probably come back to retest the structure. It could come to as far as the structure or even this ascending trend line to incite an uptrend move. So we had a very, very interesting setup at this juncture. Price just broke out of that descending trend line, which we will be using as a yardstick to guide our decisions for this week. Now, as it is right now, price is going through a retracement move, as you will see, which could be considered as profit-taking activities, as those who bought this impulsive move may want to be closing in some of their positions ahead of the economic events for this week. Now, we want to now project where this retracement phase may likely end before the next wave of bullish momentum will happen. Now, to do this, we will bring out our Fibonacci retracement tool, run it through the previous impulse leg, and if you do that appropriately, we have that area between the 50 and the 78.6% area of that impulse leg as an area we want to look out for buying opportunity. Now, let's mark out this level, potential demand zone. Okay, potential demand zone. All right, so we place this right inside this. Hold on a second. Now I give this one. Okay, so this is how I like my potential demand zone to be. So now look at the structure right here. It shares a beautiful confluence with the 1.26 area and of course the ascending trend line. Now look at the ascending trend line right here, which has been supporting that bullish momentum. So what this simply means is that we want to exercise patience at this juncture and wait to see price drop maybe into this area, where we want to see how the market participant will react to that price level at the 1.26 area, which also shares a confluence with the ascending trend line, after which, depending on what happens here, will determine if we are going to be selling or buying. Now, if we begin to see a reversal setup here, like a double bottom structure or a inverse head and shoulder pattern, we mark out our neckline and then buy the breakout retest of the neckline. However, if price action does break down the 1.26 area and the ascending trend line, we may be looking out for selling opportunities. And remember that as soon as price gets into the 1.25 area, which also shares a confluence with the descending trend line that was broken last week, we exercise patience here, move our stop losses accordingly, lock in the sell position and wait to see if the market will find buy pressure within the demand zone to incite an uptrend move, or probably break it to the downside to incite a sell-off in this market. So we are at a very, very crucial juncture. At this point, we want to see how far will this retracement phase go before another wave of bullish momentum will happen. So we've marked out a zone here which we will be using to guide our buying opportunities from the structure. Now, with this information we have gathered on the 4 hours time frame, let's scale down into the 1 hour time frame to see how market participant has been reacting to that area around the 1.2600 level to decide to find a structure that we will use to guide our trading decisions for today. Now, scaling down into the 1 hour time frame, we begin to see things more clearly. So since the week has begun, you will see here that price action has been confined within a range that is between the 1.2700 level and the 1.26650 area to emphasize the level of indecision going on in this particular market. And in fact, out of the idea that we have a range, you know how we do it. We wait for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line of that range to give us an opportunity to sell. Now, with the situation here, I had a breakout of the structure this morning with the hopes that price will continue to the upside, but unfortunately, I've been taken out of that position in a loss. But as it is right now, we are in a range, so we will look out for selling opportunities only below the 1.26650 area. Now, if we are selling below the 1.26650 level, remember what I told you about the structure on the higher time frame. I told you this is a very strong demand zone where we will be looking out for patterns that will support the idea of buying this asset. Now, if price drops and continues like this, please, as soon as price gets into this demand zone, move all your stop losses, secure the current sell position, and wait and see how the market will react to the zone for new opportunities to either buy or continue the sell momentum to the downside. So that is what we will be looking out for to sell. So below the 1.26650 level remains an area we look out for selling opportunities. However, if price action goes on to break out of the 1.27 area, I already replaced my buy stop order again, had it above the 1.27 area. A breakout of that structure will be welcoming a buy position for me, and if price continues to climb up, breaking out of the 1.27350 level, I will be adding more buy positions to my existing trade. So you can see we have a simple setup at this juncture, as our center of focus for today basically is between the 1.2700 level and the 1.26650 area, where depending on the direction of the breakout will give us an insight and an idea into where price is likely going for today. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So if you have any questions whatsoever, or probably there's an area you really did not get to understand, feel free to let me know in the comment section. Trust me, I'm here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the last and final assets on our watch list for today. So I see a comment here from Lynchy23. You say you are new here. Welcome, glad to have you around. And one thing about being new is that it could take quite some time before you get yourself acclimatized to this analytical approach we're doing here. So I encourage you to be part of the subsequent editions and stay tuned in, continue to listen, and with time you get to understand how things works here and eventually be able to use the information you gather here to make your own independent trading decisions. So I'm very glad to have you around. Just stay tuned in and trust me, with time you get to understand how things works. Okay. All right, so in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. And I do hope you are able to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today's trading session. So moving on, the next asset on our watch list is my favorite asset, which is the XAUUSD, popularly known as the gold spot. And on the gold spot, remember last week we had a phenomenal week where we capitalized on this bullish momentum. I think we had about six buy position, hereby scooping over 1,700 pips in profit from all of these positions we capitalize on here. And once again, congratulations to everyone who took advantage of this opportunity last week. Now, as we head into the new week looking for new trading setup, let's see if we can replicate the same scenario we had from last week. As it is right now, gold began the new week positively, with markets seeing a surge in buying during the Asian session. As you will see, we saw the $2016 level became a new buying niche for participants in this market. Now, geopolitical tensions and concerns about a potential recession are likely to favor the safe haven assets such as the gold. Now, the overall fundamental landscape appears to support a bullish outlook, including that the XAUUSD is likely to trend towards the upward direction. However, the strong risk appetite in global equity markets is limiting the potential upside. Now, in light of these complex dynamics, our focus will shift to the newly identified levels on the chart, which we will be using to guide our decisions for this week. Now, to start today's analysis, we will begin from the daily time frame. Now, when you look at the daily time frame from an holistic perspective, you will see that price action is back into a particular range which has been known for selling pressure since the year 2020. Now, if you look at the structure closely, you will see that since 2020, this level, as soon as price gets into this area, we see price drop to the downside. The same thing also happened here in the year 2022. That was last year, March. We saw price drop to the downside from there. Then we saw also here at the beginning of the month of May of this year, price dropped again to the downside. Now, a couple of weeks ago, we saw how price found a new high, and again, price appears to be dropping from that same area. Now, what does this tell us? It tells us that we are within a strong selling niche in this particular market, and of course, despite the fact that all fundamental factors suggest that we want to be buying this asset, we need to be very, very careful, as to capitalize on a buy position within a seller's territory takes a lot of skills to do so. Now, in that regard, let's zoom into the current structure and look at what is going on here. Now, to guide our decisions for this week, I was able to identify a key level around the $2,030 area. Now, look at what we have here. I have the key level here, and in fact, look at how this level has played a major role in determining the direction of price action since the month of April of this year. Look at what happened here. We saw price drop to the downside as soon as it got into the structure. We saw selling niche here as well. We saw a little bit of consolidation phase before price dropped to the downside in the month of May. And from May till the month of December, price action had remained below this critical area. Now, in the last 2 weeks, we have continued to see selling pressure resume again around this area. And in fact, as at last week's trading session, price action closed exactly around the $2,030 area, further emphasizing on how crucial this current juncture is at this point in time. So you would agree with me that we are at a very critical area in this market. We are depending on how participants react to the zone and will determine how we will be positioning ourselves for this week. Now, one thing I would like to say here is that if you look at the nature of the zone, it will make quite a lot of sense to look out for selling opportunities. But if we consider the fundamental factors and the geopolitical tensions and the like, which I mentioned earlier, it could support the bullish momentum. So we want to keep our options as open as possible. Now, to guide our decision for this week, I was able to identify a simple setup on the 4 hours time frame. Now, if you look at the structure on the 4 hours time frame, it is quite clear that since the month of October, price action has been on a bullish trend. And in fact, I have an ascending trend line here to buttress the strength of the buyers in this market. And the fact here is price still remains above the ascending trend line. Now, in addition to the ascending trend line is this $1,990 level, which happens to be a psychological area considering the round figure of that price. And as you will see, this level here had played a major role in determining the direction of price action since the month of October. Initially, it was more of a selling niche, as you will see here. We saw a little bit of a breakout, but price still remains within the seller's territory around this area. But when price broke out of the structure in the month of November, price action has continued to remain above this area, which for me made this area a demand zone. And last week trading session, we saw this engulfing bullish candle springing out from this demand zone and breaking out of this descending trend line right here. So it's becoming much more interesting at this juncture as we want to see how the market will react to this trend line. So let me take out all this one so that we can have a clean chart. So right now, let me zoom in as well so that we can see things more clearly. So you will see we have the descending trend line here, which I just talked about. And right now, when you look at that trend line, you will see what happened as at the end of last week's trading session. Now, from a technical standpoint, when price break out of a key structure such as this, we expect that price at some point may come back and retest that level. Now, as at the end of last week's trading session, we saw how price came exactly into the trend line and immediately it tested the trend line. We begin to notice some buy pressure resume around that area. Now, the question going into this week is, will price respect this area, that is transition into a reversal pattern to incite an uptrend move, or this trend line will be broken to the downside, maybe back into that demand zone around the 1,990 level, which also shares a beautiful confluence with that ascending trend line. Now, if we look at that, that's about how many pips? That's over 300 pips to catch there if price will get into the 1,990. So for that case, we will keep the idea of selling to open as well. Now, with the information we have gathered here, let's scale down into the 1 hour time frame so that we can see how market participants have been reacting to this ascending trend line since this descending trend line since the beginning of this week. Now, scaling down into the 1 hour time frame, we begin to see things more clearly. Now, what I did this morning while trying to dissect the current market structure was to understand the nature of price action within this area. Now, remember, This is the descending trend line we spotted on the higher time frame. This is it right here, and price still remains above that trend line. Though the week started on a positive note, as you will see, price started the week around the 2016, and as you will see, buy pressure resumed and price rose up into the 2024 $0.80 level, giving us a beautiful range to guide our decision for this week. And of course, you know how we treat our ranges. Whenever we identify them on the chart, we exercise patience and wait for either the breakout of the range to give us an opportunity to buy, or the breakdown of the range to give us an opportunity to sell. Now, if we consider the bearish momentum that started during the second half of last week, a breakdown of the $2016 level, that is the range, the support line of that range, will welcome selling opportunity. And look at how the support line of that range also shares a beautiful confluence with this descending trend line. So if price action can break down the support line, then this will be a beautiful opportunity to join a bearish move. So anything below the $2016 10-cent level makes quite a lot of sense to look out for selling opportunities. However, if price action remains above the $2024.80 level, we look out for buying opportunity, as price will have taken out all the sell positions within that area to incite a bullish idea for the first half of the week. And if price continues to climb up, then a breakout of the $2030 level will be welcoming more buy positions to our existing trade. So our center of focus for this for the New York session is between the $2024.80 level and the $2016.10 area, where depending on the direction of breakout will give us a sense of direction in this market. So I encourage you to mark out those levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. So these are my views on the XAUUSD, and if you have any questions, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we round off for today's trading session. All right, so in the absence of no questions, I want to assume that we are on the same page, and on this note, I will be rounding off for today's trading exclusive session on the Extreme Speed, as we were able to attend to 4 financial assets for this week, which includes the USOILSPOT, the USTech100, the GBPUSD, and of course the XAUUSD, all of which we were able to identify a simple setup using our fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential direction of price action for today, and at the same time strategically position ourselves for the next big move. I do hope we've marked out these levels on our chart accordingly, and if you have done so, I encourage you to exercise patience and wait for the structures to mature before you jump into any positions today. Now remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. Now in that regard, you want to ensure that you have a well-defined risk management strategy that you want to consistently use throughout all the trades you take from your portfolio. So on this note, I wish us all the best of luck, and for those of you who joined us for the first time today, I do hope you are able to gain 1 or 2 things from what we discussed here today. And in fact, if you do, you want to be part of our subsequent editions. And trust me, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information gathered here to make your own independent trading decisions. So I wish us all the best of luck, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing and at the same time get ourselves prepared for tomorrow's trading session. So do have a wonderful evening, everyone. Trade smart, trade consciously. Bye bye.